Mr. Sudip Bandyopadhyay, Group Chairman at Inditrade Capital. Good morning, sir. Welcome to the show.
Good morning. Thank you.
Yes. So first, I want to begin by asking you about the overall mood, your overall read on the market mood. Now, the Nifty is currently, hovering in that range of about 200 points or so. It is unwilling to go past that 19,250 sort of levels on the downside. Seems to be holding at least for now that 19,000 mark. Do you expect some sort of consolidation going forward?
Definitely a bit of consolidation is what we are seeing last few, I would say, days. FIIs have been relentlessly selling, DIIs have been buying, but there is a downward bias in the market, and we have been seeing that getting played out every day. I think, today I would say, before a major event, probably there will be a bit of a lull. FOMC decision will come later tonight, and we will react to that and Chairman Powell's statement tomorrow when we start trading. So I would presume that the market would not, shoot either in the downward direction or in the upward direction as far as markets are today. We will definitely see counter-specific moves based on, quarterly results as are being announced. We have seen a pretty bunch of good results yesterday. Today also there are a whole lot of Nifty stocks announcing results, and the market will be keenly watching that. One good thing I would like to point out here is that I think the scare on the oil prices going significantly above our tolerance level, I think that has subsided to an extent. I think the Gaza, Palestine, and Israel war. Probably the market has realized that there is very little impact on oil prices or disruption in oil supply because of the current ongoing conflict. Also, the subdued economic data coming out of China definitely doesn't help the cause of oil prices going up. So under the circumstances, I think this is good news. However, I must mention here that yesterday a Goldman Sachs report came out which talks about oil prices going above $100 per barrel decisively after June 24. Multiple reasons they have cited, but I think that's some distance away, and there are too many geopolitical factors to consider before we kind of act or react based on that Goldman Sachs report. So overall, I think from an India point of view, today I would say is a wait and watch. Fundamentally, we will be led by what's happening as far as corporate results are concerned. And of course, I will be on FOMC decision and commentary.
All right. Sir, talking about the Federal Reserve's policy decision meet, at least, the reports that I am reading, most analysts, and by most analysts, I mean, I think 99% of them are expecting Fed to maintain the rates this time around. What are your broader expectations, sir? Can we, expect Fed to hold on to the rates at least for the time being?
Yeah, absolutely. I think you're absolutely right. Pretty much everybody in the street is of the view that rates will not go up. But the fact is the US economic data continues to remain strong, and under the circumstances, it is very difficult for the Fed to come out with any kind of dovish statement. So the commentary of Fed Chair Powell will be very, very important. What he indicates in his speech after the rate announcement is over will be carefully watched. But having said that, I don't expect any dovish statements from Chairman Powell. He will probably reiterate his view higher for longer in one way or the other. Whether the tone is dovish or hawkish will be what the market will be watching carefully.
Sir, talking about Mr. Powell, I mean, to me at least, it seems that the Fed is in a catch-22 sort of situation. You can't really cut rates, inflation is too hot, can't raise them. 10-year yields, the US 10-year bond yields are, hovering near that 16-year high. What's the way out, sir, in your opinion?
I think at one way, if you look at it, I think US economic resilience is very clearly getting demonstrated. I think this is the one major economy, the largest economy, which is still, in spite of the rates going up to where they are, it continuously growing. The labor markets are strong. GDP data is came out as much better than what even the market was expecting. So I think that's a good news. But on the other hand, the interest rates hovering around 5%, I think is not too good for the economic future economy and as well as the markets. It's a delicate balancing act for the Fed, and that's pretty much the reason why most of the analysts are feeling that Fed will let the rates remain where they are. Another point I must mention here is that even though Fed has not done anything to the rate, market has taken the rates up already. So Fed's work to an extent has already been done. So under the circumstances, probably there is no compulsion on part of the Fed to go ahead and announce one more hike. So I think that's probably a good part as far as Chairman Powell's job today is concerned. But of course, he has to keep balancing and keeping the expectations on a tight leash.
All right. Fed is expected to keep a tight leash on the market given the resilience, but we also have a lot of earnings coming out this morning. I think 4 major Nifty companies, your Tata Steel, Heromotocorp, Britannia and Sun Pharma, are due to come out with their Q2 September quarter results through the day. Now, sir, hold on. Amit over here has prepared expectations, what the street is expecting from the report card of these companies. Amit, let's begin with Heromotocorp.
Okay, the country's largest two-wheeler maker is widely expected to report double-digit growth when it comes to profits for this September, aided by price hikes, favorable product mixes and input cost pressures. Revenue growth is likely to be muted due to subdued volumes. Nearly 1% year-on-year decline in volumes for September quarter due to weakened entry-level motorcycle demand segment in the segment. Now, profit after tax is likely to increase 24.3% to 1,290 crore, up from 1,038 crore in the year ago period. Analysts estimate that the company revenue will go up almost 2.2% to 9,725 crore in the quarter under review, up from 9,075 crore the same quarter last year. The volume of vehicles for the company is estimated to decline marginally 0.8% to 1,417 lakhs, while realization is likely to increase by 2.8% to 65,305 per unit. Wow. Analysts expect that a significant rise in margins though, up to 13.9% as against 11.4% the same quarter last year. The company's other income is also likely to rise by 60% to 150 crores. Now, Mr. Bandyopadhyay, there is something on the operating margins which are sequentially expected to rise by 50 basis points. Do you think this can offset the losses that the EV segment and the higher advertisement spends are going to cost to the company?
Yeah, definitely. I think, the quarter gone by is a story of two things. One is, the cost pressure has come down. Pretty much raw material costs have come down, and that will get reflected in operating profit margins going up. And yes, to an extent, the developmental expenses on the EV, etc., will get offset through this, the reduction in the pressure on the costs. The other factor which I think is getting played out is pretty much, the demand, rural demand was not really something to write home about. There was also the Shraddh period and things like that. So probably, I think, the Q3 will see a real bump up in volumes and profitability. Also, the number of vehicles sold, particularly the entry-level vehicles, with the agricultural crop arrivals happening, money getting into the rural India. I think things should start looking up for Heromotocorp as far as volume is concerned, and also margin is concerned from Q3 onwards. That's what our belief is. This quarter's bump up in profitability and the margin is pretty much on account of cost pressures easing out.
All right, that's the view coming in from Sudip Bandyopadhyay. Sir, always a pleasure talking to you. Appreciate you joining us this morning on First Take.